So in the last couple of videos, we talked about what the interest rate is, how it's set, and why the central bank might adjust the money supply to affect the interest rate in order to keep the economy at full capacity and with stable and low inflation.
Yeah, I'm pretty sure I got at least half of all that.
Come on, Suramya, you know I'm giving up valuable research to make these videos with you.
Well, you gotta admit it, Dan. This is way more fun than making, just doing boring econ research. Moving on. All right. So, you're right. We did look at why the bank might change interest rates, but we didn't talk about how they might do it.
Okay, sure. But before we start to talk about this, did you not get any promotions from last time? I see no new props.
Well, I'm glad you asked, Dan, because check this out.
Ah!
Do you like this? Huh? It's my newest gift. What are your opinions on knighting me for my great work?
No.
All right.
Anyway, so we talked about how the central bank affects the money supply. There's demand for money. There's an interest rate.
Yeah.
And we assumed that people get the money by actually going directly to the central bank, that the central bank actually lends it out.
Yeah. But I'm assuming that's not how it works in real life?
No, in reality, it's not like you're going to write a letter to Janet Yellen, the chairperson of the Fed, asking her for a loan.
Oh, but the thing is, I did write her a letter for this loan that I wanted, and I'm just waiting to hear back now. It should be any.
Yeah, just keep waiting. You'll be waiting for a little while. Or you could actually just go to a local bank and ask for a loan from a local bank, and that we haven't incorporated into our framework.
Oh, okay.
So why don't we do that now?
Yeah, let's do that. So if I remember correctly, in the last videos, we talked about how these three farmers get the money they want.
Yep. And these guys didn't get the money. They didn't have a high enough willingness to pay. And if I recall, they crawled into a ditch or something and died.
That was great.
Okay.
Yeah.
So now let's say that they exist again. They're back. They've come back from this ditch, come back from the dead.
Come back from the dead? Like Jon Snow?
Sure, like Jon Snow. Anyway, they're no longer in a ditch.
Yeah.
They're pretty happy about the future. Maybe they have higher willingness to pay. So they've got some demand for money. Where do they get that money from?
Well, this is Game of Thrones, so I'm just assuming that they're going to throw this big party, invite people over, and then massacre them during dinner, and then steal the money off their still warm bodies.
I guess so. That's one way. Or they could go to a local bank. How about that?
They could also do that. Yeah, they could do that.
Okay, right. Okay. So where do these local banks come from? Why do they exist? So these guys still have demand for money. Let's say this guy that wanted the boat, he built his boat, he gave a bunch of people boat rides, so he made a bunch of money back, and now he wants to save that money.
Okay.
Right? So these guys want to borrow, this guy wants to save. How do they actually make a loan between the two of them?
Yeah, it's not easy, right? Because it's not like they have email or anything.
Right.
There's no pigeons. Crows behave weirdly.
If you say
I
so.
knew you weren't going to get it. Anyway, so I guess you need like an intermediary of some kind, right?
Yeah, let's say that there's a bank.
All right, let me draw this.
Looks pretty good.
Enough?
No,
yeah,
it's good. I can tell
bank.
it's a bank.
All right.
So this guy has extra money. He deposits his money at the bank.
Okay.
And that's sort of like a central meeting place where people that want to lend money can exchange with people who want to borrow money.
Yeah, and then they just like take this money that just came in and give it to these guys.
Exactly. Perfect.
Okay. And it's convenient because you don't need to go all the way to Braavos now. You can just
you don't need to go to the central bank. You just exchange money among each other.
Okay. So now that's clear. But then why do I need this guy, central bank? Why can't I just like do all my business with the local one?
Yeah, you're saying if everyone that's lending can meet up with the people that want it, why do we even need a central bank? Well, the central bank still has an important role in actually affecting the money supply. Right? There's a certain amount of money that's already out in the economy, and the interest rate will depend on how much money is out in the economy. Even though people are borrowing and lending from each other, they have to get that money from the central bank into the economy.
Okay,
the question is, how do they do that?
Yeah, exactly.
So there are two ways that you could do it. One is the Bank of Braavos could just make loans directly to this bank. It could give gold coins to the bank, and then the bank could lend it out.
Okay, so they just have like, they get sacks of coins, basically.
Yeah, which they'll have to pay back ultimately, but in the meantime, they can lend it out.
Okay.
The other way is that they can just exchange gold coins for assets.
Assets? What do you mean?
Okay, how about goats?
Goats?
Goats. This is right. Game of Thrones.
Yeah.
Are there goats in Game?
Yeah, but this guy needs goats, so clearly there are goats.
There are goats, right?
Okay.
So let's say that this guy has a goat.
All right, he has goats.
And it's valuable, right? It makes milk and does other things. That's beautiful. It looks like a tooth, but we'll call it a goat.
Yeah.
This guy has a goat. He's not going to trade this for beer at the tavern. It's not very liquid.
Yeah.
But maybe he'll say, you know what? I'll trade with the central bank, I'll give you this goat, you give me gold coins, and then he can take his gold coins, he can buy his medicine or his beer from the tavern, and then he's all good.
I get it. And then the central bank is just now buying goats.
Yeah.
What
It
does
has
it
goats.
What does it do with these goats?
Stores them in a vault or holds on to them.
Okay.
Don't worry about it.
Okay, fine.
The point is, it took goats, put out money, then that money can circulate through the economy.
Okay.
So what have we done? We've seen, first of all, how interest rates are set, why the central bank might want to adjust interest rates in order to basically either make spending greater in the economy or to reduce spending in the economy. And now what we just showed is how the central bank actually gets money into the economy in a way that we think is consistent with what we see in the real world, which is people actually going to local banks.
Okay, I get all of that, and we use Game of Thrones.
Yeah, which is
Do all
not
of
bad.
that. That's
But
pretty
so what we haven't talked about yet is how different things that can happen will affect the macroeconomy. So for example, let's just say that you think that there's going to be a war among the 7 kingdoms. How might that affect the macroeconomy?
Whoa, Dan, have you been watching Game of Thrones?
No,
Have you?
no. Just I assume there are some kingdoms and there might be a war, right? I mean, this
Sure.
is medieval
Yeah,
times,
sure.
right?
All right. You know what? We're going to make another video about the war, but also we're going to discuss this Game of Thrones thing.
If you say so.
All right.
Next time.
Yeah.